Hi everyone, welcome to another business intelligence session with Blessing. And it's been a while we had the business intelligence, but we're back. Yeah. So if you're new here, my name is Blessing. I'm an accountant and I run a team of finance executives. We help business owners with finance, resources, management, and consultations. So today we're talking taxes with the new tax act that has been that we've been informed of in the country. And I can tell you for free, the government is not playing. But I see this as a wake-up call. In fact, I am the happiest of this, tax act that is going on right now, because it just says one thing: put your house in order. That's one thing that this says to you: put your house in order. When I mean your house, I mean the business. So in this class, this session today, we're going to be talking, what are taxes, problems you would have with taxes as a business owner. That's the possible problems. We're going to demystify, some myths that has been going around, some misconceptions, and I'm also going to be talking about the mistakes that business owners really make when it comes to taxes with case studies. I mean, I've worked with a lot of business owners, especially with these tax related issues, so I can say for free that if you're not paying taxes, it's a criminal offense for you not to pay taxes in a country that you are doing business. So it's very important that when it comes to you as a business owner, taxes are very, very important. You have to pay taxes. So let's get right to it. What are taxes? Taxes are statutory deductions. As an entity, as a business that's operating in a country, you are expected to pay tax to the country, to the government. And all things being equal, what taxes are meant for, they are a revenue generating stream for the government to take on, capital projects, infrastructure, and building the nation. That's why you are being taxed, and that's why you should pay tax. You cannot be complaining of a poor government when you're also not adding your quota to the government. But that's not why we're here. Let's go to it. When we people hear taxes, one of the first things that come to their mind is, how do I avoid this tax? How do I not pay tax? Now, there are two grammars to this notion. There's one that is legal and there's one that is illegal. That's tax evasion and tax avoidance. Tax evasion is illegal. Tax avoidance is legal. And when I mean tax avoid is, both of them mean one thing. They have similarities, and similarity is that when you hear of these two words, it just means that you would not be paying as much as you should, or even pay at all when it comes to taxes. So when it comes to taxes, these two words, they are very similar, but one is legal, one is illegal, and they have similarities in the sense that they tend towards how one person is expected to avoid tax, not pay tax, or not pay as much as you are meant to pay when it comes to taxes. Tax evasion is illegal. Tax evasion means you're using illegal means to avoid paying tax. That's maybe you're inflating your statement, your expenses, because they don't tax your revenue, they tax your profit. We're going to get to that, as you can see my board. They don't tax your revenue, they tax your profit. So what gets to your profit from your revenue is expenses. That's the gap between the revenue and your profit. So you have 100 million in revenue and you have 10 million in profit. That difference is meant to be expenses. So you see people overstating their expenses so that they reduce their tax liability. That is illegal. That's not right. But tax avoidance is taking leverage, taking advantage of, of provisions, of reliefs in the tax act, taking advantage, taking leverage of those provisions to reduce your tax liability, which is completely legal. And we're going to get to all of that in the course of this session. Now, first of all, I have heard of cases, people have brought cases to me whereby they feel like they are unjustly taxed or fined. And let's get to it. To be very honest, we all know what we are doing in this country. Nobody will bring huge fines to your desk if you also are up and doing. That's why it's right that even if they even bring it to your desk, you will not be fretting, you will not be panicky, because you are also putting the right things in place to ensure that you don't have problems like that. For they When it comes to taxes, there is structure regarding paying taxes. And when I mean structure, I'm talking about the kind of business that you run, the kind of registration that you have done to back up the business that you are doing. And the two most popular registrations in this country is business name and limited liabilities. Of course, we have the limited by partnership, we have the limited by guarantee and all of those things. But the two major ones when it comes to an average business owner is either you register by business name or you register by limited liability company with the Corporate Affairs Commission, which is CAC. One thing you need to know as a business owner, as a someone that registered via as business name, is that a business name does not pay company income tax. There are different. Let me start from the taxes that you are meant to pay that's applicable in Nigeria. There are a lot of them. There's company income tax, there's VAT, which is value added tax, there's withholding tax, there's capital gains tax, there's personal income tax, there's a lot of those taxes. Now, if you register your business as a business name, you are not entitled to pay company income tax. In fact, even as a business name, your business is not paying for personal income tax. That's not how it works. As a business name, apart from the fact that, okay, as a business name, that means you're a small company, but that you're a small business, sole proprietorship. But personal income tax is different from that business paying taxes. You might be paying things like, oh, you're paying VAT, but PIT, personal income tax, is your personal income. Because once you register your business, that means that your business is separate from you. Your business is a legal entity, separate entity, separate from you as a person. So PIT, personal income tax, is a personal income tax, not a business income tax. What is similar to that is company income tax, and business name are not allowed to pay company income tax. It is limited liability companies, that's the company registration, that pays company income tax. So if you're a business name and your state revenue service is bringing personal income tax to you to pay, that means they are asking you to pay personal income tax from the income you, as a business owner, as the sole proprietor, have generated from the business. That is what you pay personal income tax on, not on your business revenue. Now, if you registered yourself as a limited liability company, it means that your company is what is paying what they call company income tax. Now, VAT, which is value added tax, applies to both. And value added tax simply means that you are taxed on every item you buy or sell. If you check your supplier's receipts, most of them have charged you VAT 7.5%. So there's no reason why you should also not charge your customers VAT. Now, one major misconception to this thing is that, well, some of these things that people do is that they also charge VAT they add the VAT to their profits. No, it's not done that way. If your selling price is 1,000 naira, you apply 7.5% on 1,000 naira for your customers to pay. Now, VAT is not your money, it's for the government. You are like a collector for the government, because the government cannot be going into people's houses to say, "Yeah, pay your VAT, pay your VAT, pay your VAT." They are collecting it from those that they are buying these things from. So if I am buying this from the supermarket, if this is 200 naira, they will add 7.5% on this, and I will pay the amount of that aggregate. That's how VAT works. Now, when I pay that amount, the business is meant to arrange all of those taxes and remit to the government. Because me, as a let's say I'm the owner of this business now, me as a business selling this item, when I was buying the cost price, the materials, the things that I used in producing this, when I was buying them, my supplier also charged VAT. So me too, I paid VAT. So the VAT that you are remitting to the government is a deduction of the VAT that you have paid and the VAT that you have collected. You have paid VAT because you paid VAT. So that's just how VAT works. Value added tax. That's why I say that when you go to supermarket, you will see VAT on it, 7.5%. It's not meant to pass that. So that is summary of all of these taxes. And this brings me to the common mistakes that business owners make. Because you see how all of these things work. You see that it's very, very, if you don't keep your if you don't keep your records in check, you are going to have problem. Because tell me how you remit VAT on all the sales you have made when you don't have a record of all the sales you have made. Tell me how you claim VAT inputs on all the purchases that you have made when you don't have record of all the purchases that you have made. So when it comes to taxes, one thing is the common factor. Keep your records straight. If not, you are going to have problem. One of the major mistakes that business owners make when it comes to taxes is they don't keep adequate records. When you don't have records, you don't have your sales record, you don't have your expenses record, you don't have your suppliers record, because when you want to file for taxes, they don't, like I said, they don't tax your revenue, they tax your profits. Now, when they are taxing your profits, there is a gap between revenue and expenses. Now, all of these things have to be in check, because you are not going to say this is my profit and then the tax bodies will accept you like that. No, the tax bodies have an audit team that correspond your statement, the report you have submitted, with your bank statements. That's the reason why I keep saying that if you have a business, the very, very first thing that you should have at the back of your mind is that this business is separate from me. Therefore, the business account should be separate from my own account. There's no reason why I should be receiving gifts, personal gifts, into that business account. There's no reason why I should be making personal expenses from that business account, because all of these things will be checked. Now we're going to go into, because when it comes to expenses, there are allowable deductions, there are allowable expenses, there are some expenses that are not allowable. So for example, you can say you made 100 million revenue, but your profit is 10 million. So they will now, you have highlighted your expenses. If they check your expenses and they see that these expenses, not everything is allowable, they can add them back. So you think you have 10 million revenue, 10 million in profit that they should tax on, they should tax. But if they really, really check it, you see that your profit is meant to like be 40 something million. I imagine they are taxing you on 40 something million. So very, very important step number one, ensure that your business and your personal expenses are different. You are not taking them from the same account, because the more you do that, the more harm you are doing to your business. One of the implications of not having good records is that tax bodies, for example, now they want to tax you, they would use something called best of judgment. There was someone that got fined, I think around 17 million. That was the fine. No, that was the fine. And I'm like, okay. I said, let me see the bank statement. When I saw the, because there's a way they will compute it. They'll say, okay, this is the penalty for this percentage tax that we are charging on. For example, in this person's case, there was the penalty, there was the VAT charged on the total credit. Now, you as a business owner, your monthly revenue is like 2 million, but your bank statement is saying 10 million. How will you explain to them that the remaining 8 million is not for you? How? So they highlighted all of those things. They said penalty, this, VAT 7.5% on 800 and clinical million, clinical. I'm like, ah. So I now asked the person, I said, okay, where did this money come from? And then, oh, it's personal, is this, is that. If you don't have records, what they did in that case was best of judgment. Oh, if this person's bank statement is reading this so and so amount, that means it's meant to be paying so and so amount. Best of, like, head knowledge. So if they are bringing that to you, first of all, you don't need to be afraid, you don't need to panic or be scared. You present your evidence. that, oh, this is evidence of my sales, this is the evidence of this is evidence of that. That is why, as a business owner, if you are joking with narrations in your in your transactions, you are playing with fire. When you want to make expenses, narrations should be there. Narrations are very, very vital. They can save you. They can save you. What saved this person was everything was documented. There were narrations, so it was easy to prove. There was narrations and there were receipts. So we packed the narrations, we tallied the narrations with the receipts, and they tallied. And that was just how it was free from that, with warnings, of course. So this is very, very important that you don't joke with narrations if you know that you want to you don't want to fall into the trap of taxes. Narrations, your expenses should be well documented. Now another thing is, you have any personal expenses. That is why we always say pay yourself as a business owner. You see, when it comes to when we tell business owners to pay themselves, it always looks like, oh, this thing you're saying is not realistic. It will be realistic when they bring 15 million fine to you as your tax penalty. That's when it will be reasonable. That's when it will look achievable. Because we're not saying this out of the fact that, okay, we are being irrational. It's because all of these things are going to be asked. They would ask you, how did you do this? How did you come about this? So if you are paying yourself salary, you know that, okay, this amount, you don't even have to call it, you just, this thing, money for me, personal salary, personal salary, personal salary, so that all of these implications can be reduced for your business. Pay yourself as a business owner. Pay yourself as a business owner. It's not simple, it's not easy, but you have to be disciplined with paying yourself as a business owner. Before we go into, other reasons like failure to find, and all of those things, let me just show you a typical way of how taxes are being, how they come about, your tax liability, how much you're meant to pay the government, and all of that. So first of all, check this board. You would see that revenue, this is how, let's call this, okay, let's call this a report for a business, right? This is the revenue. Revenue is your sales. Okay, this is how much you made from selling your product. Do you want me to start again? Okay, this is how much you made from selling your product. This is the amount. There are categories to this thing. First of all, if you know that if you're making more than 100 million, you are not a small company. If you're not making up to that, if you're not making up to 25, 50 million, you are a small company. And the tax implication for that, CIT 0% for small companies. For large companies is at 30%. But so now we see that this company now earns more than 100 million annually. That means they are liable to pay taxes, and this is the percentage that is applied on them. Now they will not apply the 30% on this money, no. They would apply this 30% on the net profits, this net figure here. They will apply the 30% on this. But let's see if they really will apply it on this. So this is the cost of production. That's allowed. Cost of production is allowed. This is the gross profit. They will not apply the 30% of this one. Gross profit means I bought this product for this and I'm selling for this. This is how much I have left. This is not your total profit. We have operational expenses. Now, this operational expenses is exactly where tax bodies will sit down with you. Salary 6,580. It's important that narrations and vouchers. So as an organization and you are paying salaries, it's important to have payment vouchers. It's important to have pay slip. So if they want to verify, if you have auditors that want to verify this figure, what they need to do is check your pay slip and correspond your pay slip with this amount. Secondly is donation. Donation is not an allowable expense. That one is on you, it's not their business. It's not their business. There are rules to donations. There are rules to, I will get to that later. There are rules to donations, but this particular donation, I think the allowable donations are donations to educational bodies, donations, this part please. So this one is not allowed. The allowable parts, the allowable donations are different from the anything donation to church is not allowed. The one that is allowed is donations to bodies like CAN, Christian Nation of Nigeria. Hey, that one is allowed, but not to church or a mosque. So one thing they will first do is, you see this 5 million, they will add it back to this. Purchase of flight ticket. Is this flight ticket for the business? That's one thing that they will ask you. That's why everything must be documented with evidences. If it is your personal flight, or you use this, or this flight ticket is for your parents that are coming to do omugo for you when you give birth to your child, it's not allowable. They will add it back. But if it is for the business purpose, then it's allowed. But if it is not, they will add it to your profit back and tax it. Fines and mediation is not allowed. So let's say last man arrested you for not honoring your trafficator, and they now pick you and you pay fine. It's not allowed. Legal fees, legal retainers are allowed, but what is not allowed when it comes to these legal fees is like maybe fines, deductions for not doing something right. If they are, it's not going to be allowed, they will add it back. But legal, maybe like for your lawyer, for processing legal documents, that one is allowed. Marketing is definitely allowed. Office expenditure. Now if you notice one thing about this thing, they are not detailed expenses. Let's say this is like a report at the end of a year. What they will do is, of course, it's not like this money was paid in 1 month. It was most likely paid across 12 months. So if this is being paid across 12 months, that means you've been adding them up, adding them up, adding them up. One thing that you can do, one thing that they would make sure to do as well, is to check the individual components of the expenses. For example, let's say this office expenditure now, there is stationery, there's printing, there's admin expenses. They will check everything to ensure that it follows the standard of allowable expenses. If it is not allowed, they would add it back. So this profit, this net profit is what you'll be taxed on. So let's say all of these things were allowed, it will be 30% on this. But there's one thing that I also wanted to address, is that as much as, okay, maybe we feel like taxes we are paying and everything, do you know that there are actually provisions to these taxes? There are provisions to all these taxes. For example, now there's something called, in this new tax act, there's something called rent relief. That means that if I'm paying, let's say, 1 million naira for rent, I'm allowed to, be relieved of 20%. So 20%, I will deduct. Let's say my rent is 1 million. I'll deduct 20% of 1 million from this net profit. So the amount is what they will tax me on, which is reduced from this. Do you get what I'm saying? So like there's a relief for rent that has now been included. Second thing, there's something called capital allowance. So let's say you bought some assets during the course of the year, like a car, a furniture, a machine, and equipment. There's something called capital allowance, and there's a way it's being calculated. So there's a percentage for each of these allowances. There's a whole level of computation to it. That's why you should not joke with your accountant. So there's a whole computation to it, and that capital allowance, it will be deducted from this net profits to get your exact profit that will be taxed. So when it comes to taxes, you are, as much as, okay, they are taxing you, yes, the government has also made provisions to possibly reduce the tax burden on the masses, on businesses. That's why we have reliefs like rent relief now, we have capital allowance, we have things that you can deduct. For instance, pension is not taxed, insurance premium is not taxed. They're not taxed. So this, for even if dividend, foreign dividend is also not taxed for the business. Like dividend income, is always being removed because it might have suffered for tax where you're getting it from. So one of the major things that is affecting people is lack of knowledge basically, because I don't see any reason why a state revenue service will be bringing PIT to your business in the name of your business and you be running around. Why? No, it is you as a person that should pay that tax, not the business. The business has another level of liability that is to cater for. There's local government tax, there's all these levies and all of those things. But you see, when it comes to PIT, it is for a person, even an employee, an individual. That's who pays personal income tax, not the business. Now, another major mistake that businesses make when it comes to taxes, another major mistake that businesses make when it comes to taxes is not filing the tax. For example, a small company that is making 27 million or 20 million is a small company, and the tax implication of that of a small company is 0%. Now, they did not say they did not say you are not going to file. They said you are going to pay tax, but you are going to pay 0%, which is typically zero. But that does not mean that you should not still file that tax. Now, these people that I said, okay, they are being fined and all of, most of them cannot even pay taxes yet because they are not qualified to be a large company. So because of that, they are a small company and they feel like, oh, I'm not making up to that amount, I don't need to pay tax. You might not need to pay tax, but you need to file taxes on portals like Tax Pro Max and even LIRS e-tax. I think there's something like that in Lagos State. So these are the things that you are exactly meant to do. You're meant to file for these taxes. For CAC, you're meant to file your annual returns on CAC every year. And there are fines for these things. There are fines. For example, if you don't even register to pay tax, I think the fine is 50,000 naira for the first month. After that month, you pay 25,000, 25,000, 25,000. So now imagine that you're meant to register in like January, and as at June you just want to register. So for that January, that's 50,000. From now, you now add 25,000 every month from February till last month. You add everything together. That's your penalty alone. Now imagine you delay this for 1 year, 2 years. So you need to register and you need to file. If this is the amount you are making, file it on the portal. This is the amount I'm making, I'm not expected to pay. File it. This is the revenue. Fill the form and file accordingly. Not filing is the reason why they come to your place of business and drop humongous bills of taxes. You are meant to file. Not filing at all is the problem, not even the paying of the tax. Another mistake that people make when it comes to taxes is not having the right knowledge, because if you don't have the right knowledge when it comes to these taxes, you would make mistakes. And if you make mistakes, they would harm the business, they would cause issues. For example, now, someone that is entitled to deduct capital allowance, which is on your assets that you have purchased or assets that you currently have. There are allowances for those things. Now you don't know that you're meant to claim this relief. You just People will take advantage of you. All these tax consultants can take advantage. Anybody can take advantage. That's the world we live in. So it's important that you know all of these things, at least the head knowledge. Consume resources. So in conclusion, when it comes to taxes, I'm not going to say it is simple as ABC, but it is also not rocket science. Highlight of everything I have said so far in this session is: number one, separate your business from your personal income as well as your expenses. Number two, keep proper records. All the income, all the expense, every transaction that's done in your business, keep proper records. Number three is file. whether or not you are paying or not, make sure that you don't delay filing, because delaying it is going to keep increasing your liabilities. That's the fines, the penalties, and you can avoid all of those things by just filing. And the last thing is consuming resources, like knowing things about this thing, knowledge, consuming resources, and having knowledge about your obligations as a taxpayer, as a business owner. Because these things, if you don't have knowledge about it, you can easily take it for granted. So it's very, very important that you have knowledge, and I've made it my mission to ensure that every business owner around me knows about taxes. That's why I'm organizing a tax master class. If you're a business owner, if you have an accountant, sponsor them, get them to enroll them in this course. I'm going to be treating all the taxes you are meant to pay as a business owner, from CIT to VAT to withholding tax to capital gains tax. Everything, we're going to be treating everything, even to pay, because these are things that are also meant to remit. Pay as you earn for your employees. Your employees are earning over 100K per month and they are not paying taxes. They are meant to, it's not only you that will suffer, everybody is meant to do the right thing for but to the government. So pay tax. So they are going to learn you're going to learn everything about taxes as a business owner, from tax, from PIT to CIT to VAT, everything, and also registering on Tax Pro Max. You learn how to organize your records. This is the most, I feel like this is the highlight for me. You learn how to organize your records in such a way that taxes will just, it will not be a problem for you. When tax bodies come, you will not be scared, you will not be panicking, you will just go straight forward, present your evidence, file your report, and then file the taxes. So it's very, very important that be on the wait list. You can click the link in bio to join the wait list and enroll for this course. It's going at a very, very little token, so make sure that you don't miss out on this. So if you still have challenges or questions regarding this, you can drop in the comment section or just enroll for the course. I'm sure it's going to answer all of your questions. So yes, till we see next time on this channel, the Emery Tribe channel. Please don't forget to like, share, and subscribe. Thank you.